I want to thank you for taking this ride on the Last of First journey with us. In 6 months, we've achieved over 200,000 views across all our platforms. We're humbled and thankful for your support. But I do have one small favor to ask. Take 5 seconds, hit the like button or subscribe. Just like your on-time performance metric, this one matters to us the most. It helps us attract better guests and bring you deeper content to help propel you on your Last of First journey. And if your brand aligns with our mission, reach out to us. We'd love to find ways to partner and work together. Now back to Last of First. All right, ladies and gentlemen, welcome back to our third episode of our mini-series. Sitting here with Tanner Owens, who is the president of CUI Insurance Agency. Tanner, welcome back to the podcast.
Jason, thanks for having me.
Good to be here. All right, so we're going to talk about today, we're going to get into a little trucking compliance conversation, but let's set up the stage for why we want to talk about this. One of the things, we're seeing a few things right now in the final mile space that I think are showing signs of where we need to go as an industry and kind of operate maybe a little bit more like truckers do. But the first thing that we talk to clients all day long, and one of the pieces of information that we're getting back from clients is that they, one, are kind of frustrated with the lack of options, particularly on the commercial auto side in the final mile space. And look, you have a number of reasons why that is, right? You have some large brokers out there that represent a large portion of the marketplace, and so they're kind of able to control the limited amount of carriers out there. But the real reason is I think that many of the insurance carriers today, they want to see more things from the final mile space in terms of visibility, compliance, and how we kind of show ourselves to the marketplace. The other thing I'm noticing, and it's even happened with my business back, QCS, is that you have final mile companies that are starting to take advantage of some of the volume coming down in the supply chain, doing more bigger, bulkier freight, so that they use larger vehicles, right? Going from private passenger vehicles, straight cargo vans to straight trucks, even sometimes 48, 53-foot trailers if they're doing some middle mile type work, particularly in pharmaceutical space or big bulky furniture. And so those companies may not have the experience in operating in the trucking land and what that means from a risk management compliance standpoint. So you're an expert on trucking. CUI has been doing trucking for many, many years. All right, so there's all these dynamics changing in the marketplace. Final miles becoming like trucking. You see all kind of things happening. So when you first come across a client, like what's the first steps in terms of helping them diagnose their business? Like what's the approach you take?
I think the first simple question is we say, hey, what's your agent doing for a risk survey for you?
Yeah.
And they typically go to their and say, oh, our carrier was out here doing a property inspection here. And we go into more depth and say, no, what is your agent doing or your agency doing for you and your business for a proactive approach to make you a better client?
Yeah. Like, so what a risk survey, like what would that entail? Like what kind of questions would we be asking?
What's your 3 to 5 year approach to become better, cleaner, safer for carriers?
Yep.
What's your approach? Do you understand how the premiums work on the umbrella markets, the property markets, where it's going? What are they doing safety, loss control wise?
Mm-hmm.
What are they providing for you for your mod? Are they doing a mod analysis on your current workers' comp policy? Is it accurate? Me and you, Jason, just had a conversation yesterday.
Yeah, we did.
With a prospect, things that we do and go above and beyond of just even for prospects are saying, hey, we did a mod analysis on his current E-mod. He bought...
For the audience, just because if you don't know what E-mod is, explain just the basics of an E-mod so they understand what that means.
Good question. So E-mod, basically, if you're a brand new business starting out, there's a premium threshold of like $5,000.
Yep.
Once you get over that, if you're a new business starting, you'd be average is a 1.00.
Okay.
If you're better than average, you could be like a 0.90, which is a 10% credit off your policy right off the bat. And if you're a 1.30, you're getting a 30% debit on your workers' comp policy.
Got it. So it's an indicator for your workers' comp premium.
Yes, and it's a third party that does that.
Okay.
California has their own called WCRB. Most of them are go through, it's called NCCI, and they're out of Florida.
Got it. So this is crucial because like in our world, transportation, you do have drivers, many times they're W-2s, warehouse workers, clerical staff. So, and it's a byproduct of how your history, your claims history is. What drives that? What drives the score?
I mean, NCCI has been around for a long time, since first days of workers' comp, and so they have millions of numbers. How how it works is you have your class code,
Yeah.
and there's thousands of class codes, and then they have your payroll, and whatever your payroll allocated to that class code is saying, hey, based on industry average, which it might go fluctuate up and down each year based on the whole industry, how it does. But hey, here's industry average. Here's where we expect you to have claims and where those claim costs are going to be during that policy year period. And if you succeed that, your EMOD comes down.
Yeah.
If you have a bad year on claims, then your EMOD goes up.
Got it. So we're talking to a client yesterday, and
Yeah, it was really interesting. And we go into depth on this, and this is just, I mean, one of the many things that we do on the risk survey, and we go into depth on, hey, we were looking at he bought the company in May of 2021. And there were 3 claims on there literally the same day he bought the business. And they weren't even his claims. And they were from the old account, and things that it actually ended up being a debit on his EMOD. Those 3 claims were 3 of the biggest claims since he's been in business, and it was a 23% debit on his EMOD, which ended up costing him, let's just say, in a 1-year policy period, over $60,000 to $70,000.
These 3 claims. Yeah, he had 3 claims that were sitting there from this acquired company from 4 years ago, and I guess his current broker had never done the detailed analysis on the mod master to really understand that. So he's getting penalized for something that was not even his fault. But unless your broker goes and actually does that deep dive analysis, I guess it will sit there.
Yeah, a mistake was made when he purchased the business, and he's still dealing with it 4 years later.
Yeah.
So
yeah. Sorry. So we CUI, we do this deep dive analysis. One of the things is the EMOD, the mod master.
I think another thing, go into the depth. So we'll go and we look at, like, I guess we could step back. So most carriers, underwriters, they'll get 50 submissions a month, and they'll write typically 2 accounts.
Yeah.
Our job is to make it be those 2 accounts. And how we do that is we make that account, or the customer that we're working on, make them look like a gold child to that carrier.
Yeah.
And if not, here's what they're doing to fix it as well. And one of the things back to that whole point is a return to work program for workers' comp. And for people that don't know what that is, why you put that in place is it really helps monitor and stabilize your EMOD because of indemnity claims. And so we'll go into depth on what they do have and don't have. And it's not like we're here to audit you.
Yeah.
We're here to be a partner to you and say, hey, here's the things you're great at. Here's the things that you need a little work on. And if anybody's ever had a serious auto accident or workers' comp accident and it's been litigated, they're going to dig all that up anyways.
Yeah.
So you might as well get good at it now.
Yeah. Safety. I was talking to another client the other day, and we're looking at MVRs for his drivers. This is a W-2 model, and several drivers had points on their MVR that were probably not that attractive. So we're working with them on implementing safety training programs. I know you've done a lot of this in your day. Talk about safety and kind of some things you have done to help owners understand the importance of it, and also how to reward and incentivize these employees for adhering to these standards.
Yeah, I mean, legally, if you're a CDL driver, they have to have CDL files on each driver. They have to have certain specifications in that file, documented every year and updated every year. And trust me, if there's a claim, like we went back to, a litigated claim, they will dig up all of this. And I think one really important topic that we need to hit on is, I think companies really try to do their best job on what they can safety-wise.
Yeah.
At the end of the day, their job is to get that product for that customer to the end user so that they fulfill their job duty to that customer.
Correct.
They got to provide the bills, pay their salaries, pay their employees, and make everybody go home safely.
Yeah.
Sometimes safety gets pushed aside But one thing that I think everybody could do a really good job on, and they will nail you on this, on an attorney, is a lot of people do little toolbox talks at the start of the day, or they'll do them, if it's a long haul trucker, a lot of times they'll just send out an email blast or something, but documenting them, getting them signed. You can even have someone send it out to the driver saying, hey, here's this, and they can even just sign it to them saying, hey, I signed it and I read it. I agree with the conversation.
Yeah. Yeah.
Or when they're there, just have a piece of paper where it's a sign-up sheet saying, hey, driver one was here, signature, boom.
Yeah. So it shows you consistently are providing these drivers with information to help them stay safe on the road.
Consistency is one, but really it was proven that they actually did these meetings, that they're actually trying to be safe, and they're not trying to just run a business, blindsided and have nothing to do about it. So
yeah. So let's go back. So I mentioned earlier, one of the things I'm seeing in the space are companies that historically have had used smaller vehicles to service those clients are now using large equipment because the freight is changing, right? There's more home delivery of all types of big and bulky products. And some companies are moving more to the middle mile of doing more dock-to-dock delivery, so using bigger vehicles. What are the things when if you're a business owner and you say, okay, I'm going to venture off into some bigger trucks, like what are the things you need to understand about the regulatory environment when you start to use larger equipment from a DOT, you mentioned FMCSA already, CAP scores, like what are the things that should be on their radar?
obviously, one, depending on the weight of the vehicle, it's a Class B, Class A driver. You got to make sure you're very well aware of that. How much weight you can actually put in the back of the vehicle is important too for weight.
Hours of service is probably one.
Yeah, I mean that's cab report. Once you get into that realm, also semi trucks. Once you go, if it's not local radius, you have to have electronic logs now called e-logs.
Yeah, ELD mandate was like 10 years ago came in place. So
Less than that, but yes, and that was a big hit, and that's one thing I think the final mile needs to work on internally. I don't think FMCSA will really do that, but to get more carriers excited about the final mile business, it has to dovetail off of the trucking. It doesn't need to be as mandated, in my opinion, but give the carriers some transparency on what these drivers are doing. And it's a tough business because the biggest issue for all of them, you don't want them to be misclassified from a W-2 versus an independent contractor. But that is where it needs to dovetail. If final mile business, I can promise you this, ask any other broker or competitor, wants to see more companies and or stable rates, we have to get some insights to what those companies are doing from telematics or cameras.
yeah.
It'll go a long ways.
Yeah. So you're saying regardless of whether you are a W-2 model, using a 1099 model, like the fact is you have to provide more visibility to the auto insurance carriers, any property carrier, so they understand what this risk entails.
For sure.
Yeah.
Yep.
All right. So we're talking about kind of what's happening in final mile space and how we think that they can benefit from acting more like some trucking companies, right? Let's talk about this. So with CUI's approach, we talk about how we look at EMODs and kind of evaluate a deep dive on the workers' comp side. When we're approaching our trucking clients, how do we hold their hands and guide them into understanding their risk profile? Like what are some things that you are talking to them about?
Yeah, I mean, we've been fortunate. We are backed by some of the best carriers that write trucking in the country. We have the best carriers in the country to protect you, and they only do trucking, and they're limited on agencies, and it took us a long time to get them to earn our respect and trust. And so things that they look at really heavily now is cab report, and they have models that even if your losses, your claim history, which would be auto accidents, is relatively clean, if your cab report has some hair to it, red flags, like obviously red over out of service, they won't look at it. It's really hard to get to a yes on an account if their cab report has some bad scores on it. And so obviously the biggest things that we're seeing, unsafe driving is one. Hours of service, what are they doing on hours of service?
Yeah.
And then vehicle maintenance, those three. And there are some ways to help the customer out on the vehicle maintenance, because I don't care what truck it is. If it's a brand new truck you pull off the lot or a 2005, you can always, I don't care who you are, go to a DOT inspection. They can always find an issue if they wanted to.
Yeah.
The real thing is they want to make sure what are the in the weeds on those, what are they really getting inspected for and getting violations on? Is it brakes, which is an issue? Is it tires, which is an issue?
Yeah.
Things like that are
the critical function things
yes,
of the vehicle. Yeah.
exactly.
Yeah. And you mentioned a second earlier, I think it's good for the audience to know, it's hard to get these appointments with certain carriers, right? I noticed coming into insurance that I thought, anybody can get access to any market, right? Yeah, if they had to, pick the phone up and call. Talk about what that process is. Like that, it's very selective. Like you got to earn the trust of these insurance carriers. How does CUI earn that trust? And talk about just the process of what does it mean to get an appointment to a certain insurance market?
Every market's different. Regarding carriers and if it's manufacturing, construction, transportation.
Yeah.
But in general, like you need volume. In order to get volume, you got to go grind and write it with other carriers to then show that, hey, not only are we writing this type of business, they're also good accounts. So they're performing well. Their losses aren't as bad, and it's attractive because at the end of the day, that carrier has to be solvent to pay claims. And if we're writing bad business, well, it's bad for them too.
Yeah.
So it's not easy to get appointments.
Yeah.
One of our transportation appointments, it took me 7 years to get. So,
wow. Yeah, don't just give these things out.
No, they do not.
Yeah.
I wish they did. Actually, no, I don't, because it's what separates, I think, the boys from the men. So
Yeah. Good point. All right, so you're talking about cab scores, and to be honest with you, my background, I imagine most people like truly in final mile have really kind of ignorant to what a cab report is and a CSA score. So when you walk through that with a client, because I've seen you do it, where you really walk through the cab report with a client, what are some of the top takeaways or things that they should be paying attention to that's going to help impact them positively on their cab reports to look attractive to these markets?
Yeah. Well, those are the 5 basic scores that the cab report shows, and it's on FMCSA as well. It's our carrier snapshot. And if any of them are over the threshold of the industry average, they're going to dive into detail on that and why. Typically, the 3 biggest we see are like unsafe driving is one of them, vehicle maintenance, and hours of service. The things that they look at the most are going to be then what on those 3 are they getting out of service violations for, if any violations.
Okay.
And why are they getting impacted, and why are those scores being affected to where they are? Right. And things that we like to teach our customers too, a lot of the times they don't even know how those scores are calculated and how that they're driving impact on your rate. And it's really important to teach that to the trucker so we can understand and also have a good game plan together on how we drop those scores to make them look more attractive for other carriers.
Yeah.
So our approach sometimes when we get to an account is we'll go into detail on that cab report. And if he's got issues, we will show him, here's a timeline on getting this under the threshold of where it's high, where then we can say, okay, here's the game plan. 2 of our top carriers won't look at you until this is under the threshold.
Right.
How do we get there? Here's our game plan. So here's our 2-year approach to get you to a better market to really, stabilize your costs and hopefully save some money as well.
Yeah. It's one of those things that like I think it's important to understand. Like there's no quick fixes, and sometimes that's why it's so important to on the front end to try to prevent as many things you can, starting with hiring the right people and having these safety programs in place. Because if and when a claim or a significant accident does occur, like it's on there and it doesn't go away easy, right? You have to really work to get it off. And so, obviously, when we find those, what type of solutions do we have in place? Like, how do you give me one example of how you have helped someone to clean up their profile a little bit?
Well, a good example too is sometimes the violations aren't accurate. It's just like life; people make mistakes.
Mm-hmm.
And there's a company called dashcams that the truckers can go online and say, hey, upload their information. And basically, they're going to argue that this violation wasn't accurate.
Mm-hmm.
And I've seen plenty of customers get violations taken off that record.
Mm.
So that's one model.
Mm-hmm.
I think that to your point, you hit on it big time. People think, I mean, that's just our world we live in. Everyone wants it now.
Yeah.
But unfortunately, and especially in insurance and cab reports, as well as loss history, doesn't matter what it is. Once you have that claim, it's going to be on your record for 3 to 5 years.
Yeah.
Cab reports 3 years, but there's ways where we'll teach them how the point system work, and most people don't know that. Like most people don't understand how the points work, and show them, hey, here's our game plan, our proactive approach over the next couple of years to get that down, to get you with this market we want to put you with.
Yeah. You have any examples of clients that you've done that with? Like, can you talk about a before and after in terms of how those changes over time, when implemented, helped improve their premiums? Ultimately, what we're trying to get back to is containing cost.
Oh, yeah. I mean, trucking insurance in general, sorry, truckers, it's just, it's expensive.
Yeah.
Same as final mile. It's transportation in general, even contractors, construction, just commercial auto has gone up over 9 years consecutively.
Yeah.
Every quarter.
Yeah.
And there's a lot of reasons to that. There's a lot more litigated claims in today's world, impact on umbrellas. So a good example is we had a customer that was with a higher, a lower tier market.
Mm-hmm.
And it was due to some claim activity and some high cap scores. And we were trying to place them with one of our top tier markets. It took us, I think it was 3 years to put it with them. And we made some promises on our end to say, hey, trust the process. It's going to work.
Yeah.
And we were able to, 3 years later, with almost double the fleet, because the fleet grew, cut their rates in almost half. Why? Because it went from someone who was substandard of a carrier that only provides higher end rates to one tier market better during that second year period. And then we were able to place them with our top tier market. And ultimately, it didn't cost the insured, I don't think, much money to invest in this. It was little just time on, hey, let's focus on these 3 things. And it was really, there was a couple cab report violations that they were having frequency on that was really affecting their violations. And it went a long ways. And one of those was actually turned into a claim before they were with us. So not only did we help them on a proactive approach on reducing all of their cap scores, but we also helped them. They didn't have another claim since then. So regarding that kind of claim.
Yeah. Yeah.
Great story. I mean, you don't tend to see cost savings that much, and to see almost half the cost. I'm not saying it's going to happen every time, but there are better carriers with better rates.
Yeah.
That's the truth.
Yeah. All right. So you give some good insight on the trucking side. We're talking about the CSA deep dive and stuff like, and give example of clients that have gone through some of these safety trainings, implement that in organizations, they found success, although it may not happen for everybody, right? But one of the things that I learned is that there's different ways insurance companies can rate and develop your premium. Composite rating, standard rating by miles. Talk about, if you're an owner, the types of things you should be talking to your broker about in terms of formulating the best way to price your business. Like, for example, tariffs right now, it's a big topic, right? This, you were talking about a client you have where maybe their solvency is in jeopardy because there's no freight at the ports. And they do a lot of drayage type work. And so, there are fluctuations on the business right now. So they may want to have a different type of structure if they have a renewal coming up and they want to structure their premium pricing based off of what their business is doing right now. Yeah. What are different ways that you can price your premium from an auto standpoint?
Jason, that's a great question. I think sometimes owners don't realize that they have options in how they report insurance or really their assets, which are their vehicles, to an insurance carrier. And we have carriers that will do different options. For example, they can report their account on mileage. Yep. They could do it on gross revenue. They can do it on vehicle count on a monthly spread. Why I love those models too. All three of those, to your point, it's called composite rated. So for the audience, I think that's the sleep easy pill at night is what they like to call it, where any auto's covered anytime. Okay. And so, for example, you got a customer with 15 vehicles and they add one, they go buy one on a Saturday. Oh yeah, well, hey, they give it to their gal to add on a Monday or whoever that person is, and they forget to tell us and they go get an accident that afternoon. Well, if it's scheduled 7, there's no coverage for that vehicle. If it's symbol 1 or depending on the vehicle symbol, which is kind of getting into the weeds, composite rated, any auto, anytime. So there's coverage on that. So
you can add vehicles on there and essentially they're not going to charge you pro rata for that vehicle.
Yes. Yeah. And what it's great too on the what I like is the monthly reporting is, unfortunately, there's also maintenance sometimes that happens and a vehicle breaks down and it's in the shop for 3 months. Well, you can take that vehicle off during that time and save on premiums. And then when it comes back out of the shop, you can put that back on. Yeah. So there's ways to help save on insurance costs other than just your traditional vehicle on, vehicle off.
Got it. We got a lot of great insights on the trucking side, the compliance piece, what happens from a CSA, from a CAP score standpoint, what you can do differently to improve your scores, give some examples of that happening. But there's a point where you bind coverage, right? And then in my experience, typically that's when the conversation with your broker kind of stops. Unfortunately, that's how my experience has been when I was operating my family's business. I've learned this is a different approach being at CUI. Talk to me and talk to the audience about what that difference is. Like, what are you doing after the bind, after the sale, to ensure that partnership is there?
One, especially with specific accounts, we do a stewardship report, and that goes into our promise to you as a customer. Are we fulfilling our agreement to you? Are you getting what you need out of us as an agency? And I think it goes a long ways, and we do full transparency. Other things too, like typically this is before the bind, but we're reviewing all their policies. Like, hey, is there anything that we're missing in these policies that need to be included? There are so many supplements and or exclusions in policies that really need to be taken in full consideration for that client. Yeah.
Like reviewing contracts for the customers they have, or
I think a big thing for a lot of customers, obviously that in the final mile, they have ICs, so that's pretty standard. But a lot of customers in other industries, they do hire random subcontractors for certain things, and making sure subcontractor agreements and the right wording is in place for our customer. There's so many, there's very few times where I've ever taken an account over, looked at their subcontract agreement, if they had one, and said, oh, that's great. You don't need to do anything. Yeah. There are always tweaks and or improvements that need to be made
to kind of close those gaps that they may have.
Yeah. Exactly. I think especially in the contractors world, they've become so certificate happy on wording, on a lot of wording, but ultimately it's there to protect that general contractor who's doing the job.
How often do you talk to your clients? Like, on a annual basis, monthly basis? Do you talk to them monthly? Are you often talking to them about what's happening? Does your account manager talk to them? Like, are you giving them a quarterly report, a look at their claims history? Like, give me some details of actually what you are doing for these clients. And you talk about fulfilling our commitment. Like, what are the things that you commit to?
Every account's different. So every account needs different needs and necessities. I mean, personally, my accounts are probably touched daily. So either by somebody in my office. Things that we love to do for anybody out there, I think one of the biggest, if you think, what do I expect from my carrier, my partner of an agency, is claims to be paid. Sorry, I pay a lot of money for premiums. And I expect when I have a claim that it gets covered and I'm taken care of.
Yeah.
Unfortunately, there's a lot of the times mistakes happen. There's good adjusters, there's bad adjusters. I don't care where you are, where you go. Things that we have in-house that are CUI as employees, we have our own adjusters. So we will help get claims efficiently closed as fast as possible.
Why is that important?
If you've been in the business long enough, or you've had a claim open for 3 to 5 years, it's just like inflation. Insurance costs, medical costs, everything's gone up.
Yeah.
So does every open claim. So the faster you can get a claim closed and settled, the better you're off. So that's something that we'll go do. We can do monthly claim reviews. We can do quarterly claim reviews. And we're transparent. We're not scared to say, hey, here's your loss run report. Because a lot of companies, when they ask for a loss run report, they're typically thinking that they're shopping.
Yeah.
And that's something that I feel you build a partnership, you build trust with, and we're here to make them better and or safer, to hopefully reduce costs and have a very good proactive approach with our customers.
One of the other things that I didn't know coming into the insurance world was certificates, COIs, and requests for that. I didn't know how challenging that could be for certain brokers and companies. Like, what does CUI do there to help clients to get those certs responded to efficiently so they stay compliant and notifying their partners of that they have the right insurance in place?
Yeah, that's something I really pride CUI on, and we've done that from day one since I've been there. And truckers especially, you need certificates out on a timely matter. And our job or our goal at CUI is once we get a certificate, it's done within 5 minutes. Now, obviously, if there's additional forms or wording on subrogation and different things that we need actual documents from the policy and the carrier that need to be added, that might take a little more time. But general certificates, which most truckers need, we're done within 5 minutes. And we have had a very high retention in customers for trucking. And that's a big reason to it, is they know when they need a call on us, we get it done.
Yeah, because they're getting like a call from a customer for an opportunity for a job, and it could be they had to respond really quick to win that job.
Yeah,
or part of that they have to provide the COI.
Right? Yeah, or a lot of the times it's the load board where they go to the freight market and they're like, hey, I got this load from Salt Lake City to Florida. And you bid on it, and it's a quick bid, and you got to show proof of insurance, and that is why it's super important. Yeah. Other things that we offer, too, that are nice is the trucker can do their own certificates. So if they get a load at midnight, they can go on and do a general certificate themselves, which is really nice. Got it. They can go right under our website, and it's done immediately.
All right, so let's just close out. Quick round of a few commonly or frequently asked questions that I get, you probably get, too, from prospective clients or current clients. Hey, I have been with the broker for many years. I may want to shop, but I'm scared to because it's going to hurt my chances of getting a better rate in the marketplace. Is that true or false? Like, should you shop it or not?
I think it depends on the situation. It depends on what your broker/partner is doing for you. Are they doing stewardship reports? Are they doing claim reviews? Are they going above and beyond by just giving you a policy? Are they proving to you that they're going out to market and getting other quotes? If they're not doing those things, then yeah, I think there are, I don't care what space you're in, if it's final mile versus others, there's always opportunities to look at other markets and or better partners if they're not doing the things that you think you need. You're paying a lot of dollars towards insurance, and it shouldn't just be selling you a policy. There's a lot more in depth that goes into that as well. Obviously, we understand cost is always number one.
Sure.
I mean, but if you take cost out of it, what are you looking for as a partnership from a broker?
Yeah.
What is it?
I think it's a good point that I learned from you and the team is there's cost and there's like total cost of insurance. Right? There's premium, and then there's total cost of insurance, which includes, the administrative stuff that's happening behind the scenes, and includes some of the safety training components of it. And so, what if, or have you had a scenario where, like, another question I get is, what's a BOR, or broker of record, or AOR, an agent of record change, and when are those, what are the scenarios in which that has played out where you have asked a client to give you a BOR?
I guess two scenarios. One, in our space, it's kind of gimmick, but only one broker can access a carrier. And why I would get a BOR, especially up front, is we put together a whole report to this carrier to make this customer look like an A account. Mm-hmm. And here's the things that they're doing to do that. And we will ask questions to get them there. And so be prepared to get a lot of questions, because that's our job. But it's also here to help, maybe for your guys' end, save money, but make them look like a good account, like that carrier really wants them. Mm-hmm. So what we like to do is go, and it's called an agent of record, and the customer has to sign that and say, hey, we want to access XYZ carrier. Mm-hmm. And then we become the agent on that carrier. Another great example for a BOR is we talked to a customer literally yesterday, and we were going through a whole stewardship report with the client. Mm-hmm. And come to find out, there were some serious issues with the workers' comp. And the old agent missed when they purchased some business, and ended up costing the client, at least this year, it's cost them $70,000. Mm-hmm. But that's been ongoing on for 4 years. So if you just take
almost $300,000.
Yeah, a little more than $300,000 of something that shouldn't have been the insured's fault or on their record. Mm-hmm. And so we talked to the client and got a BOR, which is called a broker of record, where we just took over. We believe they're with a awesome carrier, and we're very good partners with each other. We've worked with them for a long time. Mm-hmm. So we just took that carrier over, and we became their agent, and working on a good partnership for, I would hope, for the many years to come.
Yeah. Well, Tanner, it's been great, man. I appreciate you kind of giving us that deeper insight. And for the audience out there, we're trying to give you the feedback on the things that you can be thinking about as you navigate this terrain, and whether you're in final mile, or you've kind of gone to middle mile, or you may all the way be in trucking. And there's a lot of regulations and requirements that you have to have out there. So we hope you really enjoyed this segment with CUI and Tanner, and where you've really, look, we're here to educate you and inform you, and I think that's what we've tried to do in this mini series, is to give the audience insight, because like, insurance is a wild world. I had no idea 2 years ago when I joined. We were joking yesterday. Someone said that I've gone to the dark side, but it's a joke. But I think it's really the light side, because I wish I would have known all these things when I was operating our business. There's so much knowledge that I've gained now that I and we try to share with our clients and our prospects, because there's a lot of details, and you have to have the right broker that understands your industry, understands how to maneuver and pull certain levers to help you look attractive. Like, that's the art side of insurance that I knew nothing about. Like, I thought it was just all numbers and data, but you can massage and do things with the right broker and right partner. So, any final words for the audience? We close out?
No. Jason Burns, you're the man. Proud of you.
Thank you. You
work your tail off for your clients. You're a great dad, and lucky to work alongside you. So thank you.
Touche. Same here. All right, so we're closing out. It's the third part of our mini-series, CUI Insurance Agency, Tanner Owens, Jason Burns. Peace out.